Okay, we're live.
All right. Hey, good morning, everybody. It's Friday, August 16th. Wow. Rock and roll the last 24 hours, huh? Off that solid retail sales, quite the uptick and moving to the higher ranges. Looks like that retest of the opening range was the only shot. And I even mentioned on the call, it's like, looking at a possible long here, we trade below, we could go back and retrace the area below. And that seemed like a good idea. It was definitely kind of a black and white area definable risk. So I missed that one, and never would have thought we would have rallied another 40 points. Just never would have thought that. Or I guess 30, 40, yeah, 43 points. No, I really wasn't thinking that, but other people had other things in mind. Um, Hey, look, reality is I've been trading the futures for a while. You know what? And sometimes you're able to jump on the trend bandwagon, and sometimes you can't. It it's a difficult business. Um, Fortunately, I mean we've kind of, I mean the three of us, Dan and I and Lee, and it's like I mean just kind of, I mean now more so me. I was more predominantly futures, and then with being in the rooms and meeting up with Dan and Lee, it's like I now have more of a 50-50 mix where maybe it's 60% futures, 40% stock and stock options. But fortunately I have that because now there's been numerous times where we've had big moves where we weren't necessarily able to get on on the trend for the day, and a lot of times people don't know it until the trend for the day has already happened. But normally we're already long real quality stocks, and we're in at good levels, and we're still long the market synthetically for our stocks or directly with our stocks. So we were able to take advantage of yesterday, and toward the highs yesterday, I trimmed some of the ones that I was pretty, that I mean, I'd loaded up on Amazon, so I was able to trim some of that. So I know that we have just a little bit of a sell off from a high is about, well, geez, about 38 points from the highs overnight at 55.82. And that would be this chart right here. So this is where we've done the last 3 days. So I feel fortunate that I trimmed a few stocks, and I don't really have any hedges on, and we'll see what happens here. There's two areas looking at this map right here, our road map, that should just stand out right away. And those would be just the two key things that you look at right now. The first is this level here at 55.25. That's like at the opening print times, post data, and we retested this 55, 25, 27 area. That would be the line in the sand on the bottom for today. Given where we're at right now, it's certainly possible to test that. If we trade below that, there's a good chance of retracing that low volume spike on retail sales from 7:30 yesterday down to 54.91. That's entirely possible. So just have that as kind of a do or die sort of level. There could be an opportunity for a short down in there. The first test here, it likely would be, a bounce. It probably shows some sort of support, and then possibly we would trade back into the areas, overnight, or perhaps go and retrace the highs of 55.82. Besides Michigan sentiment on deck, nobody knows what's really in the cards. A lot of other people, they're just still a ton of longs out there. So I mean, let's just let that play as it will. I'm going to keep it. I'm going to keep it that black and white. I want to see how the market opens, see how we respond on the Michigan data, and that should stir few extra things up. But typically, after a really big move, I mean, there are days where we have another big move, but at some point there's some sort of consolidation to retrace through the low vol area to auction to set up for the following moves in the market. So we're going to keep it as clear as that. I will provide the NDX levels in the room, and where the spread is, and try to highlight opportunities yesterday. Of note, I definitely, you guys saw me, I was pointing out a few areas that were possible for shorts yesterday on the way up. Look, those were just reality. Those were key levels that I had correlating with NDX. I would do the same thing all over again. But knowing the type of market we were in, I was taking fast scales. So they ended up being counter trend shorts, not worthy more than 3 or 4 points. I was fortunate just to take the fast scales, and I had stops at break even, or maybe I netted out 1 to 2 points. So not a very worthy try. But again, those are just levels that I have, and I make it a binary decision, and I act quickly. And if I don't get quick scales, I'm down to half size or I get out. So that's just my rule of thumb, and that's just how I trade. And just a little food for thought there. And I'm going to go on and quickly hand it over to Dan.
Morning, everybody.
Good morning.
All right. So let's talk a little bit less about where we're going to go and sort of what are the possibilities of outcomes that could happen today. And think about this from the point of view of um, what would I do as a trader, okay? Think about this, all right? You got long somewhere in here, right? Let's say you didn't buy here. You didn't buy here, but maybe you bought in here. Or maybe you did buy in here or buy in here. Okay? So now you are very euphoric because holy shit, I nailed the bottom. Now we come all the way up here and we get this nasty sort of rounded top here coming off of an area, especially on the NASDAQ, that was a big time resistance. So hold on one second. Max is being a pain. Sorry. So now you see this sort of rounded top. And now say we get under sort of these key areas that, and let's go to actually to the SPX. Let's say we trade back, or this is SPY. Say we trade back below the 50-day, or QQQ gets below the 50-day. IWM, holy shit, that's ugly. Say we get there. Now think about it. What do you do with your longs? And what tends to happen and is that if we get below, say, let's say this 32 or 25 that Gov was talking about, people are like, fuck, maybe I was wrong. And there tends to be a little bit of panic if you get below sort of these key areas that people were watching for the all clear signal. That's what I don't know if I'm anticipating it today, but I think is a very real possibility based on the size of the move that we have had over the past week and a half. I think today there's a possibility this morning that if we trade below this 30, Gov has 25, I have 33, so let's call it sort of 28, which split the difference. Now, if we trade below that, there's no volume here. Look all the way back. This is a 1 hour chart. I mean, there's really nothing here. I mean, we move fast through it here. We move back fast through it here. We move fast through it there. Fast, there's no levels. There isn't anything. So you've got a real gap here, a volume gap from this 33 down to 40 points lower. that would sort of be my thinking today, is if we do trade below this level, I could see us coming down into this ES 4490 area, and that would be where I might be interested in testing along. I think that would be a very logical spot, because if we break below this area, I think you see a little panic. I think you see a little unwind. You've got Nvidia at 121, that gets below 120, that unwinds. Tesla, what's Tesla at? Tesla's at 212, that gets below 210, that unwinds. Apple, Apple's in less precarious of a situation. IWM, that gets below 210, that unwinds. QQQ 470 unwinds. SPY 550 unwinds. That to me is what I'm looking at today. If that doesn't happen, I expect chop. That's literally sort of the two. I don't expect today to be a grind upwards day. It just, to me, it wouldn't rationally make sense. The market doesn't always need to make sense, but I just don't think that that's in the real possibility spectrum today. When you've got there were so many people selling puts in the last week and a half. I saw everywhere, all over Twitter, massive put sells. When you get a swift move back against you, which is very typical for when you have very whippy action, especially off the downside, and then you have whippy action back, sort of that panic sets in from bulls when it goes back against them, and bears when it goes against them and creates these whippy up moves. So yeah, that's sort of what I'm thinking today, is that I am not thinking today is going to be a drift upwards day. I'm thinking today is going to be either down or sort of consolidation. We will get a lot more information about next week, whether it's going to be a really fun week, which if we get a pretty good down day today, I think next week will be a fun week. If we get sort of a choppy build out the volume profile from this area down in here, and if we start to build this volume profile out in here and come back to this area where we traded very wide and whippy, which was, if you remember, this area was probably the most fun futures trading that we've had all year. So if we come back into that fun area, I think that we could certainly do a little big wide whippy range, which would be fun futures trading. So I think that either way, today probably is going to be a really fun morning. The afternoon probably will slow down, but I think this morning there's the possibility of us having a couple of really good trades. So with that, I will turn it over.
Good morning. Good morning. All right. Let me go here into my 4-hour chart. Familiar thing that we've seen here. So sort of the 30,000 foot view is we have this pattern. Is it breaking down? Maybe. Do we have confirmation of that yet? Nope. I shared last night that this could, because we did extend beyond the 88.6, which was the 55.46 level, which we're retesting here this morning. And we got some slippage beyond that. We could be, sort of in that spot where this pattern's done and we're going to get the sell-off. But there was the secondary pattern, which could take us up to this 161.8. Which is 58.97. Not saying I expect that, but just it's a possibility. Now, if this is pattern completion, how do we sort of see where this is going? Well, the textbook move off of a bearish pattern is, this is X, A, B, C, D. So this C to D leg is the one that we've been playing the last week and a half. And the textbook says, well, we retrace back to C. but you have to draw your Fibonacci's to kind of see along the way where are you going to see some areas of support. So if I zoom into a little smaller time frame here, easier to see, the first level of support was right here, which is where I took along here a little bit ago.
Can you tell us the prices that you're at? It's hard to read the price.
Yeah, so that was this 55.38 and a quarter. I was going to jump into the smaller time frame. So the reason actually why it's hard to read on this chart, these levels, because there's two fibs here. There's a longer term Fibonacci I have here that kind of coincided at the same point. So right around this 55.38. And then this yellow line below is a daily mid pivot level. So I took the long this morning because we were, sort of finding support in this zone, and I'm still long. Off of this level, we actually had a little bit of on a smaller time frame, a little bit of an inverse type look to it. So I'm still sticking around in that long right now. If we break below this level, then we have a ton of room below that, all the way down to this these two Fibonacci's here. More interested in this 54.8875. If we jump back over here, we have a few pivot levels on the way down, nothing major, but this is the 23 retrace off of this pattern, would be 54.8875. So if we do break below here, there's probably quite a big volume void in this level here. From yesterday, this is the strong move up. So it could move pretty quickly through this level, and we just have a ton of confluence in this zone right here. So that would be my anticipation if we do break below these levels, is to trade down here, and obviously watch the SPX and the NDX for some confluential levels and some support in here. I think there's a couple gap fill levels that we could watch out for. But that would be my that would dictate a lot how we anticipate the market going forward. If we jump back over here and zoom out a little bit, so when you have these patterns, if we're in a really bullish market and sentiment is pretty hot, these will retrace to the 38, which is right here, and that will be it.
Price?
That's the 54th. Let me see here. 54.30.
54.30. Oh, that's way down there. Okay.
So, and that's basically taking, let me take all of this off the chart for a second, make it easier to see. I'm going to take all of these fibs off because I have so many, so you can get an idea of what I'm talking about here. So we take this fib measurement from this C to D leg, right? So C up to D. And that's how we come up with our fibs. So we're supported here at the 38.75. We're supported here at the 54.8975, which is the 23 retrace. And then the 38 is the 54.34.
That 39 would align with what I'm seeing at that 90.
Okay. So a lot of the time these patterns, when we're in a really bullish sort of sentiment market, they'll come down to any of these three levels, but usually this 38 is a really big one, and then we resume up. If the market is still suffering because of uncertainties, maybe we've got, some catalysts coming up with the Jackson Hole, and then we start getting into next month. We'll see kind of how things pan out. If this Japan carry trade thing is still an issue, maybe things turn a little bearish still, and then we really get this full retrace down. But nobody knows what that is. We just have to use these fibs to kind of guide us and let us know, where are we going to go. So the other thing, I'm kind of watching, we have this trend line here, we broke out. Maybe this is just a retest, which will line up with the 23 fib, and then we can resume higher. So that will be a big level. If we do break below this 11.4 retrace, we'll be looking for this 54.8975, which I have. That's where I was kind of drew this circle here. This would be the 23 retrace. I've got a couple areas of prior support and resistance. We've got this monthly pivot here, this line right here. So just in this zone from, I would say, 54.95 to 54.8875 would be sort of the primary area of support to, look for reflex longs there, but also potentially it could be where we stop and then resume to the upside because it lines up with this trend line here. So that will kind of be a key to watch if that holds. And then if it doesn't hold and we lose this 89.75, then we're probably coming down to this next fib here. So that's kind of what I'm looking at. We're probably leaning a little more for, pullback or a grind today.
I have a question for you.
Yeah.
I don't know if you were on the space with me yesterday.
Briefly, I was on and off, yeah.
So sort of towards the end, and I sort of had a light bulb go off because I was looking at the NASDAQ and QQQ. Can you draw that pattern that completed on the ES at 46 on the NASDAQ and see where that one completed? Because I wonder, and I brought it up yesterday, that I wonder if the NASDAQ had the same pattern or QQQ had the same pattern, and that's what sort of slipped us above it for that one to complete. And I meant to ask you yesterday to draw that for me, but
I'll do it on NQ because that trades after hours.
That works.
So let me pull up. So we'll pull up the 4-hour chart so it's comparable. Oops. So you can see the same formation already. So I would come in here. I would draw my so then we draw the Fibonacci's. So the correlation, where we're looking for the 88.6 would be the 19.455. So if you put it sort of side by side, oops, 19.4. Yeah, I mean it's got pretty much the same.
What about QQQ? Because QQQ looked like it needed to get to like 475, 476 was sort of a major level, and those major levels tend to line up with your patterns.
Yeah, it would have been 469.73.
Yeah, so it blew through it on that too. Okay.
Yep. Yeah, and like I said, we could very well be in this kind of a setup, which is that crab, which would put QQQ at 407.95. So there's a lot of
essentially double top it.
Right. So there's a lot of possibilities out there. Right now we're sort of in this little sell-off here, so let's see how that materializes. On the individual stocks, there's really not a whole lot I'm looking at. I've still got longs in Microsoft, but I rolled everything out to next week. And for a credit, so, nothing at risk there as far as losing. I still have Tesla 420s for next, 420s, that would be really out there. No, 220s for next week, but already scaled a ton yesterday. Amazon, I scaled. I have equity in my long term that we picked up. I think Gov picked that up with me. We were at 162, 163, and we're now up at 175. So that was a decent swipe. I know Nike's been doing well. And phase, I took a bunch off the table here yesterday at this 118 level. We're retracing a little bit here after hours pre-market. But these were already over a double. So these are, basically risk-free. Say Nike again, or Nike. Is that better? Just don't ask me to say aluminium. You people pronounce that aluminum shit. I can say shit because Dan already screwed up with the X-rated YouTube.
I didn't catch what he did.
Oh, you dropped the
Said
F-bomb.
F word.
Yeah, so now I have to categorize it as adult content.
Whoopsies.
So yeah, there's not anything spectacular that I'm like, oh my god, we gotta jump in this. I think today is, like everybody has said a million times, capital preservation day. Manage the positions you have. If anything jumps out at us, we'll say something in the room, but just manage the positions. I wouldn't be panicking and selling any longs that you've made free. And we're not seeing that, oh my god, things are breaking down like crazy. We're just in like a little bit of a retrace, mean reversion, whatever you want to call it.
I would say the level of things are breaking down is if we get under ES 5490.
Yeah, I think just play it level to level. If we start breaking below this 37-ish area, 37 down to 35, I guess. If we start breaking down there, then there's a good chance we're going to drop lower to this trend line at this 54.90, like Dan just said. If we break below that, then things could get a little hairy. But we have some decent support down here. So this is the difficult part. There's a long way down to here, 54.31 that I mentioned, this 38 fib, and then we have a support level right above it here. That would be a pretty decent sell-off for the day, down to here. But if we curl and come back up, that would be seen as really bullish for the market. So,
Relative to that, I think if you look at the profile from yesterday, the 55.50, 55.51 area, it attempted, it got up to about the 65 area and then came off, came back down into there, and that established some support. So I think that's kind of the pivot level for the day, that if we get back, we need to get back above that for there to even have any room to go retest yesterday's 65 VPOC, maybe the current VPOC.
Which level again? Say that level again, David.
The 55.51 area in ES. That area there, if you look at yesterday, that established some intraday sort of support.
Right.
And then we kind of bounced down there, and then we took off and went and picked up another 20 points.
55, 50, you mean 61?
No, 51 right here, where we came.
55.51.
We had some resistance there, then we broke through it, and then we found some support. The market's just opened. Hold on a second.
Anyway, I think that's just kind of a pivot level for the day. We need to get above that level, and we just did on the open.
I actually just took a scale there.
Yeah. Well, let's just see what the market wants to do. I was just pointing out that if it wanted to go a little bit higher, that layer, I think that level just needed to hold. That's all. Anyway, all right, good luck, everybody.
Have a great day, all.
Yep.